Welcome. I'm Catherine Magana here with Rachel Ivanovich, Steve Wolf, and Vince Stefano, where we're here to provide you insights about the markets, planning, and much more. And here we are, still the headlines: the Fed, earnings, tariffs, and on Rachel's mind, taxes. It's interesting. We do have a webinar coming up on August 26th. We're going to be having a webinar on the One Big Beautiful Bill Act. And so that's something that's coming up, and you'll be getting some information from us in our newsletter over the next few weeks. But just
does that sound like a dumb name for an act? Does anyone else think that?
That's actually not even the name of the act.
What
it's
is
like
the name?
Title 26, blah, blah,
I like
blah,
the big,
blah,
beautiful
blah.
bill.
Yeah,
What are they
this
gonna
is way
call it?
better.
Well,
Yeah.
I don't. Is it beautiful, Rachel? Tell us how beautiful.
Oh, it's big, but it
It's
may
big.
not be beautiful. That's for sure.
All right. Sorry about that.
That's okay. Okay, so just a recap. The Fed came out yesterday, and they're kind of holding their breath on when they're going to lower rates. With the indication, there's really no indication yet if they're going to lower rates in September or not. Looking at kind of some of the chances of a rate cut. It actually, as of this morning, it's a 40% chance, and earlier this week it was about 65% chance. So we'll see what happens.
I really wonder why we listen to that anyway, because the chances change every month for the next month.
Well, but it's been priced into the market, so at some point we're either going to see it or we're not.
Well, you may not. I mean, Trump would like to see it, but right now it looks like because the economy is heating up, and who knows what. I mean, I don't think inflation is dead.
No. Definitely. I was just looking at inflation as of June. We were at 2.7%. So we're definitely.
So we're pretty close to that 2% that they're looking for.
So, okay, just a quick recap of where we're at with the markets from last week to this week. Today is July 31st. Can't believe we're at the end of July. And
What I can't believe is my oldest son is 46 years old today.
Oh,
Wow.
And
Congratulations.
I'm only 48, so I don't know how that happened.
yeah.
A miracle.
And so from last week to this week, the Dow Jones is actually down. So as of today, we're at about 4.51%. The NASDAQ, which is more tech stocks, is actually up from last week to this week. It's at about 9.42. And the S&P 500 is actually up slightly. It was up 0.07. So today, as of yesterday's close, it's at 8.18. The biggest change over the last week was small cap. So the Russell 2000 was actually down, and year to date we're at about 0.10%. So we've seen some movement in the markets, just kind of looking at some of the sectors that are performing. As of yesterday's close, industrials were up year to date about 15%, communication services up about 3%, information technology about 1%. And then the laggards are the ones that are underperforming sectors right now. Our healthcare was down about 10.9%, and consumer discretion down about 0.3%. So it's kind of interesting where the markets are at, and really not that much movement in the S&P 500. But once again, those small caps just keep moving.
But off the April lows, the S&P is up about 32%.
Yeah.
So, I mean, it's had a pretty big move in a very short period of time after it dipped first.
Yeah. I think we forget about that now. It's like
Everybody has forgotten about that.
But we remember it.
Yeah.
But I think the market is getting a little bit stretched. The question is the bull market over? I don't think it is. But a pause here would not be surprising, considering how far we've come up. Matter of fact, I think it not only would not be surprising, I think it would be healthy. I wouldn't mind seeing a little bit of a pullback here, so that we don't get at everything out of hand. Statistics and where we're at.
Well, I think we're in kind of a funky place right now. The current market, we've had a big run up, like you said.
But also earnings have been.
And I was just going to touch on that. Right now, the market feels like it's either a coiled spring or we're in the summer doldrums. I'm not sure which one. But as we come to the end of Q2 earnings, the vast majority of the S&P has done quite well. And they've beaten consensus. They've guided up. And you have to remember that corporate earnings and revenue, that's what drives the stock market. It's nothing else but that. And, case in point, yesterday, two of the biggest market cap companies in the world reported. They beat consensus. They guided up. And today they're, accelerating very nicely. And they're keeping some of the broad indices, in the positive. But what you had said, one of the things about inflation, and I think it's real interesting, a lot of the stock market analysts back in March predicted that we were going to go into a massive recession, possibly a depression, because tariffs were going to kill everything. But a funny thing happened on the way to the forum. It didn't happen. The market actually did the complete opposite. They saw policies initiated by the Trump administration as being very growth-oriented and very pro-American business. And so now those same economists are saying that the S&P may return 20% this year. I don't know. That'd be almost more than a double. I think you said it was up about 9% or 10% for the year.
Yeah, so right now I think we were closer to year-to-date 8.18%.
Yeah, so that's more than a double from here. I'd love to see that.
So what you're saying is that economists don't know what they're talking about any more than the weatherman does.
Well, I'm just saying, I think that, they looked at, they all got kind of caught up in the very negative aspects of what tariffs do. But when you look at it from a 30,000 foot level, the economy's chugging along nicely. I mean, you had just mentioned that the GDP grew 3% for, I think it was last quarter, and we saw inflation at 2%. And you were mentioning something about 2%. That's Goldilocks right now. I think the Fed will most likely cut rates. Yeah, it is. It's Goldilocks. It's growing at 3%, and you've got inflation at 2%. That's perfect. That's Goldilocks.
I usually have my locks with bagels, but
well, yeah,
that's okay.
I like Goldilocks. Anyway, I think, as Steve, you were mentioning about you were mentioning about rates and where it is. I think the Fed is likely to cut rates as we see inflation stay around 2%. And that's going to be very important, number one, for the housing market, number two, for the overall U.S. debt, and number three, again, it's going to force people back into risk assets, and that's going to be very important for the overall market.
If rates fall down, you mean?
Yeah.
Yeah, but right now it doesn't look like they are going to go down.
Powell's a political animal, and I think if Trump stops beating up Powell, I think he may cut rates. But every time I don't know.
Although I don't like the way he's being treated, I don't think that has anything to do with it.
I think he's going to cut rates per the end of the year. Recent tax bill, I think it's creating somewhat of a stable environment as people are looking at it.
That's exactly what I was going to say.
Tariffs are more thoughtful, and people can live with like 15%. I think that's a number that people are very comfortable with, especially the market. Other nations are now treating us very nicely. And one big thing is business deregulation is having a huge impact on investment capital being driven into the United States. And that's going to help the stock market very well through the rest of this year and on into next year. So, we're sitting here at the end of Q2 earnings. We have two big earnings reports coming tonight from two of the remaining Mag 7 stocks, and we'll see what they do.
Yeah, but interestingly, the market's not taking off from these. Those individual stocks might be, but the market isn't, which is why I said, is it over? I don't think it is, but I think, we're coming into a seasonally bad part of the year. Generally speaking, August is not a good month for the market. Sometimes September is not a good month for the market, historically speaking. So from that standpoint, who knows? That may not be good. The VIX has been pretty well. It's been flat and low, which the VIX is the volatility index, saying, how volatile is the market and what do people expect? And it's been low. I wouldn't be surprised if we see a little bit more volatility. The other thing that's been happening is the dollar index has moved up a lot, and that could be a headwind for some of the stocks. So what I was saying before is it over? No, I don't think so. But I do think that there could be a downward move here in the near term. If it is, it's very possible that could be a good buying opportunity. Who knows?
Well, any decline we've seen recently has been a very good buying opportunity. And okay, before we move on, where is your fear and greed index?
It was at 76 last week, and to be honest with you, I didn't look at it this morning. 76 was just in the greed sector. It hasn't moved that much really in the last 2 or 3 weeks, so I'm sure it's right in that area.
Yeah,
I say I'm sure,
Yeah.
like I know, but I would guess that it's in that area.
So over the last couple of weeks, we've been having a lot of conversations with clients, and part of it also has come from them hearing us speak about doing mid-year reviews or looking at some tax planning. And so one of the things we've had several conversations recently about is, should I do a Roth conversion or a partial? And for some of these clients, they are usually right now they're between 60 and 70 years old, and is the ones we've been talking to recently. And so there's some different things you have to consider. Is are you still working? Are you not working? Are you taking Social Security? And then how much should we convert? And those are definitely some things that we've been looking at.
I think because we now have a tax act and people can plan for their taxes, they are considering conversions. I mean, as I was talking to you about yesterday, we even had a 40-year-old. He was in his 40s who called and said, "Should I do a Roth conversion right now or not?" And things to consider are what's my other income. And like you said, if you have Social Security, you have to consider IRMAA surcharges.
IRMAA meaning?
The income-related monthly adjustment amount. It's basically a tax. If your income goes up, then your Medicare premiums would also go up. But this client who called in, who's in his 40s, his company's having a particularly poor year because of
because of the tariffs.
Because of the tariffs, they're having a hard time sourcing some materials, and so they're going to take a huge loss this year. I did tell them, let's wait until the end of the year because things could turn around. So let's wait until November, December to do the planning for this Roth conversion. But it basically, if he's saying, well, if I have this huge loss and I have not a lot of other income, can I convert $100,000, $200,000 from my IRA into a Roth? Does that make sense? And pay the taxes now? Because when you do a conversion, you have to have the cash to pay the taxes. So I said, let's wait. Let's wait till the end of the year.
Well, I think part of that calculus, too, is how old you are.
Mm-hmm.
I think the younger you are, the easier it is because you have a lot more time to make up for it. But if you're 65 years old,
It may not make sense.
It may not make sense at all.
Right.
Well, but if you're not working and you
Correct.
don't have a lot of income, then
It might be a good time to do that.
So if you start looking at projected RMDs for later, say 10 years out, and your tax bracket's going to be a lot higher.
Right, but again, you're looking at 10 years out. And what I'm saying is that the younger you are to do this, the more it makes sense. Doesn't mean it doesn't make sense for older people.
We have a client who we were just talking to, yesterday or the day before, who is 62, 63, something. And so she's also considering it because she doesn't have really any other income right now. And we said, well, let's not let your tax bracket go to waste. And let's make sure we take it, because if we calculated out what the RMDs or required minimum distributions from those IRAs will be later. And she was going to be in the 22% bracket. So we thought, okay, well, how much can we convert and take advantage of the 10% bracket and the 12% bracket? Now that we know they're not going to be higher brackets.
I'm listening to the discussion here, and I've listened to it for many, many years. Why don't we just make the 401ks and the IRAs tax-free, period?
I think it's a great idea.
Okay.
That's a great idea.
I mean, you have some people who do it, of course you have to pay the taxes. Why they want the taxes? So they can fund Social Security. But if you have more in your pocket, you may not need as much Social Security.
Well, that's a great idea.
I'm mumbling here, but
it's a great idea. I think you should run for public office, and you could propose that as a policy.
Well, you already pay Social Security, Medicare on your whatever you defer. You're just deferring the federal and state tax. So you've already paid Social Security and Medicare taxes on whatever you've deferred into your 401k.
So another thing that came up over the last week or so, that was a discussion about the IRMAA again. And so if you're retiring or there's a major event, potentially you can submit a waiver and work with your Medicare specialist about
to reduce that or to completely negate the additional surcharge. Yeah. So there is a form you can fill out if your income, let's just say you have a life event, and retirement is one of these life events. So you could say, my income is going down dramatically, even though you have the 2-year look-back period, and because the Social Security Administration doesn't look at the current year, they look back 2 years to determine how much of a surcharge you have to pay. So you can actually submit a waiver.
I'm listening to what we're saying, and this is just off the topic here. IRMAA, IRA. I mean, everything is an acronym. Is there anything that we have in our business or any business that's not an acronym?
Well, part of this is it's not just us, it's the IRS, and they come up with all these different terms.
The IRS,
DOJ.
DOJ, the whatever. I mean, everything is an acronym.
That is true.
So, okay, that was off the beaten track.
Yeah, well, digress a little. It's the end of July.
End of July. It is. It's hard to believe it's the end of July. By the way, happy birthday, Brian. It's
Happy
my
birthday,
oldest son.
Brian. Yes,
I didn't
man.
get that in before because you guys rudely interrupted me.
Oh, sorry.
No, you interrupted yourself by saying you were 2 years old or something.
When you had him. It was a miracle.
And by the way, I will not run for office.
No, that's too bad. You would be.
No, there must be an age limit, and I think that over 70 you shouldn't be allowed to run. And when I get there, I'll
That's
let
another
you.
rule.
There you go.
All right. So what else do we have going on here? Nothing more in the tax world?
Oh, there's so much going on in the tax world, but I'm going to be putting on a webinar, or we are going to be co-hosting a webinar on the One Big Beautiful Bill Act on August 26th. So stay tuned.
August 26th, and it's a webinar.
It's a webinar, yes.
Okay. And people can get onto that webinar? How?
How do we
Yes,
register
so
for
there
that?
in our newsletter, there's a registration on that, or if you want to reach out to us, we're happy to send you the link. And then there'll also be a replay that's available on our website.
Because the more I dig into this, there is so much in this bill. It's big, definitely.
Right. Well, there's a lot going on, too. I mean, all these trade talks, I understand that Mexico has been given a little bit longer now to, comply or do whatever the deal is going to be. The British area, United Kingdom, has agreed to something. Japan is agreeing to something. And the big thing is that they're putting money into the U.S., like big money. $560 billion from one country, about the same from another country. So, Vince, you talked about, things coming back to the U.S., good for our economy. You're absolutely right. I think that getting manufacturing back here is a big deal.
Huge, especially pharmaceuticals, because we really need to bring our pharmaceuticals back into the U.S.
Well, not just pharmaceuticals, but defense. I don't think that we want our defense industry to be manufactured in China.
I agree with that too. I mean, we need to, it needs to be done here.
Right. So a lot of things are happening. It's not just about tariffs. We've talked about this before. It's about what else are we doing to trade with other countries, where it's being manufactured. So, I think things are going pretty well at the moment. Yeah. If you asked me this 2 months ago, which you did, I wasn't too crazy about this. I thought tariffs would be a bad thing. But it looks like not only are we not seeing inflation, at least as of yet, but those tariffs are going into our coffers and paying down our debt. So that's a good thing. No disagreements here?
No, I have no disagreement. I'd rather see that happen than have the government send checks out to people, because they were talking about sending checks out from the tariff money, and I would rather see that money go to paying down the U.S. debt.
It's like, we can't afford to send out more.
Well, I've heard that too, and some people
Yeah.
think that's a good idea if you have a surplus. But to me, I agree with you. Let's get rid of the debt, because that's what the problem is. When so much of our budget is going to paying off debt, let's get rid of the debt. That's what we would tell our clients, right? Mm-hmm. You've got this huge credit card bill
How are we gonna pay it off?
that at 20%. Well, what's the first thing you pay off? You pay off the credit card bill before you do anything else. So this is our credit card bill. It's going to come due if we don't get it paid off. So I think it's a good thing.
I think it's a good thing, yeah. Pay down the debt, man.
All right. So a lot of earnings coming out here this week.
I got two big ones tonight.
Right. But I mean a lot of earnings. This is a very,
Yeah.
very busy week that we're
this
having.
is. This is the busiest week.
Like you said, the earnings are coming in at pretty good. But again, the market isn't rising by a lot. It's been very, very slowly crawling up, and it leads me to believe that there's going to be a pullback.
Well, no, I think you made a point a couple of weeks ago when we were talking about earnings and the market, and you said it's now a stock picker's market as opposed to just being an ETF or an index market. And that's what's happening. So if you're picking the right names, you're doing quite well. If you're just running an index, you're up 8% or something, when you could be up a whole lot more. So, it is a stock.
Not that 8% is bad.
8%'s pretty
No,
good.
8%'s not bad, but
But some of these stocks are moving up 8% in a day
and
when they come out with earnings.
I look at where some of your portfolios are, where some of mine, and we're much higher than that 8%. So, knock on wood, baby. I don't like to tempt the stock market gods, but I'm going to tell people, stay invested. It's going to be news driven for the next 3 months, 4 months until the end of the year, especially with all the stuff coming out with more tax stuff and the trade deals. But I think, Steve, you had mentioned it also, valuations. And I think that, what's the S&P trading about 22 times? A lot of, big technology companies are trading in the low 30 times, but they're growing so much faster than the S&P, and that's why it's going to be a stock picker's market. So stay invested and, keep buying good names, and AI is going to continue to be a huge driving force in all industries, not just technology.
Yeah, this is a major revolution as far as technology. So there's no question that we're all going to be using it. I mean, I've told a few people, ChatGPT is my new best friend. I think I must use that about 40 times a day. It's so much easier to look up things than the old, you'd Google something and you get, 100 headlines, some of which might not even be applicable. With ChatGPT, although I have found some mistakes in it. When you ask questions and you find it, hey, I don't think this is right. And it comes back, yeah, you're absolutely right. But that doesn't give me 100% confidence. But nevertheless, it's way easier to search something. It's way faster, and I think that's going to be good for all business.
And then going back to the AI and tech and all that, a lot of those are in ETFs and mutual funds if you're invested, as well as the S&P 500. So you are potentially getting some growth component. But yes, if you have individual stocks that are just in those sectors, it just depends on how you're allocated with your portfolio.
I was going to say the weightings are so incredibly different, where you've got some stocks that are up huge that are just a small percentage of the S&P.
But it's also how much risk do you want to take?
Yeah.
There's always a single stock risk. I mean, yes, some of these are going great, but there's no guarantee that that's going to continue. Whereas when you have a basket of stocks, the chances are you're not going to get hurt as badly, but you probably won't make as much if you're on the right stock. So just be careful. It's another week. Be careful this week. We'll see you next week. I don't think there's anything else we've got going. So until today's July 31st, when's our next one? August 6th or something like that?
So that will be August, I don't know.
Whatever it is. Next Thursday, we will be
August 6th.
We will be here, and you'll probably be getting it next Friday. Until then, have a great week, and we'll talk to you soon.
Thanks.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.